So say you've saved up $10,000, or perhaps $10,000 has just recently fallen into your lap. Sweet. And now you want to invest it in the stock market. So let's go over what I would do in 3 different situations. 1, if I was an absolute beginner and hadn't started investing yet. 2, somebody who's had some experience but they still don't have a cohesive portfolio yet. And of course, someone who has been investing for a long time and already has a pretty established portfolio. So let's start with beginners. If I was a beginner and hadn't invested before, I'd probably start with an index fund. Most likely VAS, Vanguard's Australian Shares ETF. It's the most popular in Australia. It has a pretty good return. It averages around 8 to 9%, and the dividend yield is pretty decent for an index fund as well. But there are also other great index funds. There's IOZ, which holds the ASX 200. There's SFY that holds the ASX 50, so that narrows it down a bit. Or if you want to go the dividend route, there's VHY that focuses primarily on dividend companies. So that's kind of what I would choose as a beginner. However, I would not put the full $10,000 into the fund up front. Now, why not? If you've never invested before, beginners especially are kind of intimidated by the stock market. And $10,000, if you're a beginner, is a lot of money. So if the only experience you've really had in the stock market is maybe you've had a few trades here and there, but not really consistently, and your only experience really is from reading or watching videos, then I would actually do it really slowly. And this is going to help your mindset investing long term. So I would still invest in that one ETF, but I do it in, say, 2,000 one month, 2,000 the next month, and so on, until I felt more comfortable investing over the long term. This is going to change the price that you pay out. So some months you'll be buying more, some months you'll be buying less. So you'll get used to using a dollar cost averaging strategy. And sure, putting the whole 10K into the fund at once will be more cost effective. You won't have to pay 5 transactions, you'll only have to pay for 1. But I think mindset is really key for a beginner when they're starting out, if they're going to invest long term. I think that's way more important, and why I would suggest starting slowly and just breaking up that full amount and putting it in slowly so you start to feel more comfortable investing. Then once you've put the full $10,000 in, you can start thinking about adding a different fund or maybe some individual companies. But that's where I would start as a beginner. So let's move on to the next stage. You've already got some investments, you're starting to build your portfolio, and you've got an extra $10,000. Here is where I would look at my current portfolio and see where there are gaps. This is going to vary a lot depending on where I am as an intermediate investor. So my first question would be, do I need to diversify? Do I need to balance things out a bit? That's where I would be focusing my attention. I personally like individual companies. That's just a personal preference. Some people prefer ETFs, but I would be looking at which companies I need to either add to, or perhaps I'd be looking at a different fund altogether that's something that's not in my portfolio already. Anyway, this time I'd probably split the 10K into 3 different amounts, probably 5K, 3K, and 2K. 5K would go into the company that I'm feeling most confident about right now, just to build that one up. 3K would be going in to buy something completely different. That could be a different sector, that could be a global stock, that could be something in emerging markets. Something that still aligns with my goals, but that I don't currently hold and I want to add to my portfolio. And the last 2K, I would actually use to go on a fun holiday. The reason I would do this is because, again, investing is a long game, and if you're already building your portfolio, you can get overly focused on this, and a lot of it at this stage is just waiting around. It's time, waiting for the compounding to kick in, waiting for the dividends to roll in. And I find that actually quite a tough stage to be in when you're in that kind of middle stage. So I really think it's important at this stage, if you have an extra $10,000, put $8,000 in the market, but use the extra, go and just enjoy life. You really want a positive mindset if you're going to reach those long-term goals. And it doesn't hurt to have some money going back into your lifestyle, just to remind yourself why you're doing this. At least that is what I would do. So let's get to the last one. The more advanced investor who has been investing for a long time, has a pretty established portfolio, and has just got $10,000. So this is probably me right now, and so this is what I would do and do. So $10,000 compared to my portfolio now isn't as much of a deal as it was when I was a beginner. So putting the whole $10,000 in at once, not really a big deal, and probably what I would do. I would look at my current portfolio and I just pretty much pick the company that was paying pretty good dividends, but might be down in price. So I could still lock in a pretty good dividend yield, but I'm really enjoying the company and I just want to build it up. So I wouldn't be adding any new companies to my portfolio with this $10,000. I would only be building up one of the companies I already own. I don't buy new companies much anymore, usually only if I'm getting rid of one and I want to replace it, but that doesn't happen too often. So that extra $10,000 into my portfolio now would mean around $500 extra a year, which probably doesn't sound much if we're talking about a 5% dividend yield, although sometimes I look for higher, but it's going to add up and grow over time. And remember, each $10,000 you're putting into your portfolio now is more money that will help you save the next $10,000 even faster. So it really starts to snowball here, which is amazing. So that's pretty much what I would do in each stage, depending where I was as an investor, me personally. Now you might be different. I'm not telling you what to do with your money. I'm just telling you what I would do, because investing mostly is about making money, yes, but it's also about the mindset. You really want to get into a positive mindset and understand that this is a long-term game. So that's why I would do things the way I have suggested in this video. But I also want you to not only focus on the stock market, but also go live your life as well. So that's what I would do. What would you do with $10,000? I'm interested to hear. Anyway, I hope you've enjoyed this video, and I'll see you on the next one. Take care. Bye.